Hi, this is Saurabh. Today we are going to learn capital gains tax. So what is capital gains tax? It's simply the tax that is collected on our chargeable gains. What are chargeable gains? If there is a chargeable disposal of a chargeable asset by a chargeable person, that means there is a chargeable gain. So before we look at chargeable gain, let's understand capital gains tax in easy way. So for capital gains tax, there must be a capital asset. Capital assets such as car, land, building, shares, these all are capital asset. So if we buy a capital asset, we must dispose our capital asset. So there are two simple transactions. First buying the asset, second selling the asset. So if buying the asset is simply means our cash outflow, and selling the asset simply means our cash inflow. So for example, we sold a painting for $20,000 which we bought for 5 years ago for $15,000. So this $15,000 is our cash outflow and $20,000 is our cash inflow. So we simply deduct cash inflow from our outflow. So $15,000 will be deducted from this $20,000. So inflow minus outflow. So $20,000 can simply be called as selling income. So this is our selling income less buying cost of $15,000. So after deducting $15,000 from $20,000, we receive a profit or a chargeable gain of $5,000. So this $5,000 can be called our capital gain. Before we look at the example number 2, let's understand the chargeable gains. So chargeable disposal, chargeable asset or chargeable person. So first let's take a chargeable person. In the UK, every individual is considered as a chargeable asset, chargeable person. Every UK resident, individual and partnership is a chargeable person. Companies are also chargeable, but they do not pay capital gains tax. They pay corporation tax instead. Chargeable disposal. Any event of selling the asset, gifting the asset, or loss or destruction of the asset is a chargeable disposal. Now, chargeable asset. Usually all assets are chargeable except few exempt assets. The exempt assets are cars, cash. It is not necessary to be UK sterling to be exact. Any currency cash is exempt. Any car is exempt. Main private personal principal private resident. Individual's main resident is exempt from capital gains tax. Wasting chattels. Now chattels are tangible movable asset. Not all chattels are exempt from capital gains tax. Only certain wasting chattels are exempt from capital gains tax. Individual savings account are exempt from capital gains tax. National insurance certificate, qualifying corporate bond, which is not included in this list, is also exempt. And gilt edge security, UK government securities are also exempt from capital gains tax. Now let's look at chargeable gain asset. Chargeable assets are shares and security. Suppose we buy a share and we sold it for a profit, and then that profit is isn't chargeable for capital gains tax. Land and building, investment properties are chargeable under capital gains tax. Antique artwork and jewelry, business goodwill, cryptocurrency. So these all are chargeable asset and these are exempt asset. List of chargeable asset is infinite. There are so many assets that are chargeable, but there are only few exempt asset. Now disposal proceeds, incidental cost of disposal. To understand this, let's look at example number 2. The example says we sold shares for $20,000 which we bought 2 years ago for $15,000, and we paid brokerage fees on sales of $300 and $100 brokerage fees when we bought the share. So this $100 was paid 2 years ago when we bought the share. So let's simply understand this is our cash inflow. This $20,000 will be a cash inflow, and this $15,000 will be a cash outflow. So in other words, we can call it selling income or disposal proceeds. So this is our disposal proceeds of $20,000 less our incidental cost of disposal, which is our brokerage fees. So the brokerage fees is considered as incidental cost of disposal. So we deducted the brokerage fees of 300 from $20,000. Then we receive net disposal proceeds of 19,700. So this 19,700 is our net proceeds. Then we deduct allowable expense, which is our buying cost of $15,000. We can also call it acquisition cost of 15,000, and also deduct allowable expense, which is again brokerage fees, but this is when we bought the share, which is 2 years ago. So this $100 was incurred 2 years ago. So $15,000 and $100 will be deducted from this net proceeds. So after deducting that, we receive profit or gain. This gain can also be called chargeable gains. So disposal proceeds will be a selling income less incidental cost of disposal, which can be legal fees, valuation fees, and advertisement cost. Suppose we advertise our asset that we want to sell this particular asset. So the cost for advertising is a incidental cost of disposal, and we deduct incidental cost from our disposal proceeds. So after deducting this incidental cost from disposal proceed, we receive net disposal proceeds. After deducting incidental cost, the final figure will be net disposal proceeds, and this net disposal proceed we deduct allowable expenditure, which is original acquisition cost and enhancement expenditure. Original expenditure cost is simply the buying cost, and enhancement expenditure, for example, we bought a house and we renovated and added an extra room, so that room will be an enhancement, and cost for renovation will be called an enhancement expenditure. So we also include enhancement expenditure as an allowable expenditure, and we deduct allowable expenditure from net disposal proceeds. After deducting that, we receive chargeable gains or an allowable loss. Now, why allowable loss? Because it is not necessary to be profit every time we sold an asset. If we sell an asset for less than we bought, that will be our allowable loss. So suppose we bought an asset for $20,000 and we sold it for $15,000. Let's reverse it. So that will be our loss of 5,000. So that 5,000 is our allowable loss, and if we sold more than our buying cost, that will be our gain. So this will be our gain and allowable loss. And every single asset we sold for the tax year we will aggregate all the gains and all the losses. So total chargeable gains for the tax year will be aggregated of all raw gains, means the total current year chargeable gains, which is this figure. This figure is our total current year chargeable gains, means all the disposal we did in this year are total current chargeable gains. After we get this amount, we deduct current year allowable capital losses. So we deduct capital losses from our chargeable gains. Then we receive net current year gains, or we can say net gains. Net gains are received by deducting capital losses from capital gains. After we receive our net gains figure, we deduct an allowable exemptions, which is annual exempt amount of £3,000. So the UK government gives us a relief of £3,000 each year for an individual. So we have an figure called annual exempt amount, which we deducted from the net gains. So we deduct annual exempt amount and less brought forward capital loss. Now what is brought forward capital loss? Suppose we did an capital loss in previous year, so we can carry it forward to set it against our current year gains. So if we did a loss, we can carry it forward to next year, upcoming year, and to set it against the gains of that year, so we can get our relief. Our main target is to reduce this amount. So so if we reduce this amount, our tax liability will be reduced. So this is the sort of relief we get by carrying it forward the loss of previous year. So we can deduct it from current year gains. So finally we receive capital gains figure, which is which is the final amount subject to capital gains tax. So this amount we will multiply our tax rate into this final figure. So let's recall it. First, disposal proceeds means selling income less incidental cost of disposal, which can be brokerage fees, legal fees, valuation fees, or advertisement cost. So we deduct incidental cost from disposal proceeds, then we receive net disposal proceeds less any allowable expenditure, then we receive chargeable gains or an allowable loss. After we receive that figure, we aggregate all of the gains we did for a particular asset. Suppose we sold 5 assets, we will combine all of the capital chargeable gains of that 5 assets and put that amount in here. And after we get our chargeable gains, we deduct current year losses, which is allowable capital losses. So it is not necessary that we did profit on each asset sold. We might do losses, so that losses will be deducted from our chargeable gains. So we receive net current year gains, and then we deduct annual exempt amount, and then we deduct brought forward capital losses. After deducting brought forward capital losses, we receive taxable capital gain. Taxable capital gain will be the final amount subject to capital gains tax. This amount, in this amount, we will multiply our tax rate, which is for a standard asset 10% for basic rate taxpayer and higher rate taxpayer 20%. Now what is higher rate and basic rate? If an individual's income is below 37,700, then they will be called an basic rate taxpayer and they will be taxed at 10%. And if an individual income is above 37,700 and below 125,140, then they are higher rate taxpayer. So anything above 125,140, they are called additional rate taxpayer. So for basic rate taxpayer, the capital gains tax rate for standard asset is 10%, and for higher and additional rate taxpayer, the rate is 20%. If we sold residential property, for example, then our basic rate taxpayers will pay 18% and higher rate taxpayer will pay 24%. So this is our capital gains tax.